Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello, everyone. Welcome to another episode of On My Way to Wealth. My name is Luis Rosa, and I'm your host. Thank you very much for joining me. Today, I want to speak to you about embracing failure in order to achieve success. I know some people might look at that and be like, what in the world are you talking about? Nobody wants to fail. And without doubt, nobody wants to fail. I certainly don't. But one thing that we must recognize is that in order to succeed, very likely you will encounter failure first. So how do you deal with that failure? And the attitude that you have toward it might really determine how quick you get to that success you were looking for in the first place. So let me share a quote with you that is often attributed to FDR. And he obviously said it and made it famous. I don't know if he's the one that came up with it originally, but this was in the context of the Great Depression following the Wall Street crash of 1929. A lot of you have heard this. It says, "We have nothing to fear except fear itself." And I love one of the paragraphs from that speech. 1933 presidential inauguration, Franklin Delano Roosevelt said, "So first of all, let me assert my firm belief that the only thing we have to fear is fear itself. Nameless, unreasoning, unjustified terror, which paralyzes needed efforts to convert retreat into advance. In every dark hour of our national life, a leadership of frankness and a vigor has met with that understanding and support of the people themselves, which is essential to victory. And I am convinced that you will again give that support to leadership in these critical days." I love that. And we're going through a tough time right now, right? Going over a year already into the whole COVID pandemic. We had some stock market volatility at the very beginning. Things have come back since, which is great. So, I feel like from a stock market perspective, now looking back at it, it wasn't as terrible and definitely not as bad as the Great Depression or even 2008, which is great. But stock market aside, a lot of people are in similar scenarios where they have lost their jobs, their ability to make income and continue to strive for success in whatever their life goals are. So I think it's still very relevant. So I was thinking about this, say I deal with a lot of clients that, during our conversations, they bring about their biggest fears, so I'm always encountering different perspectives. And, it's fascinating to me because I find that how you react to either your fears or an actual event that has happened in your life will have a great impact in the outcome later on of your goals, your actions. Two people can have the same exact thing happen to them, and how they view that event and the actions they take from there end up completely defining their success rate in those goals. So it's very interesting to me. So one of the things that I wanted to talk about is embracing that failure, right? Because unfortunately, we're not going to always achieve what we're going for immediately. We might have to change course. We might have to change action. We might have to come at it a different angle. We might have to wait longer than we anticipated to achieve a goal. And think of these in terms of any goals. This could be financial, could be your retirement, saving for your kids' college, buying a home. But it could also be things that are not necessarily money related. Like, maybe you're not happy in your job and you just want to find a new career, and that might be very challenging for a lot of people, just realizing what is it that I truly enjoy doing and how can I turn that into something that makes me money, whether it's a new job or a new business. A lot of us have been dealt really hard cards during the pandemic, and some people take that as an opportunity to move forward. I've had conversations with people who were let go of their jobs. Now, a lot of them were in a position where they got some sort of payout from the company, whether it was a severance pay. Some of them a lump sum, or some of them just continue to get paid for a certain amount of time. And they have actually embraced that and said, instead of me sitting here and thinking like, wow, I lost my job, it's more like, where is the opportunity here? And I've seen some of my clients that have been going through that situation and actually reinvent themselves, and go from working in one area to now, okay, you know what? I was let go because of the pandemic. I'm going to finally go after this passion I've had for years that I never dare do as a result, because now I was kind of forced into the opportunity. But instead of sitting home and just being depressed about losing the job, which obviously you have every right to, it's like, you know what? It happened. I cannot change the past. What can I learn from this going forward? There is a Napoleon Hill quote that I really, really love. And he basically says, I'm probably paraphrasing a little bit here, but he says, every adversity, every failure, every heartache carries with it the seed of an equal or greater benefit. I'm going to say that again. Every adversity, every failure, every heartache carries with it the seed of an equal or greater benefit. And I find that to be so powerful, because in essence, he's saying, you can learn from your mistakes. You can learn from what adversity you're going through now and find that there is, in fact, some sort of hidden opportunity. And he always mentions in his book, Think and Grow Rich, how Thomas Edison, quote unquote, failed. He says 10,000 or so times before he invented the light bulb, And the way that Thomas Edison saw it, instead of saying I failed one more time, he said, great, I learned one more way of how not to do this, how not to approach this. And he just kept crossing things out. He looked at it like, all right, this is 10,000 ways of how not to do it. So I'm getting closer, right? I mean, it's quite an attitude to have, because I probably would have given up at the 40th time, right? Instead of continuing for over 10,000 times to make that happen. So that is super powerful. And the reason I wanted to talk about this during this episode, I think is very relevant to the times, because again, I deal with a lot of clients. I see so many situations, so many fears. And it's just interesting to me how some people just take opportunities that are sometimes hidden in a specific situation and then just run with it, So I would like for you to do the same, start thinking about whenever you quote unquote fail at something, to see if there's a hidden benefit there, some opportunity, some lesson that you can learn and then apply going forward. A lot of you probably have heard this word said, analysis paralysis. And that is basically saying sometimes we get so caught up in analyzing a situation that we have information overload, and it combined that with fear, and it basically paralyzes us and we don't make a move going forward. And that could be going for that new job, switching that career, starting to work out, whatever it might be, starting your 401k, anything, like we start over analyzing things and then fear sets in and then we just don't do anything. And sometimes taking the wrong action is actually better than no action at all. And the reason I say that is because sometimes you're going to take a step towards what you think is the right way and realize that it isn't, but it doesn't mean that you're much further away from your goal, because now you can pivot based on the information you've learned that you wouldn't have had you just stayed sitting down and just being paralyzed. So there's a lot to be learned there, and a lot to be said for just taking the first step. The road to a great journey begins with a single step, right? That's another famous quote. And it's so true. You don't have to necessarily take a massive leap in order to start moving towards the right direction. One of my episodes, I spoke about having a vision board. So for example, your first step towards a goal could simply be to either print out or clip from a magazine a photo of that house that you want to buy. You know, you didn't start saving towards it yet. You didn't apply for a mortgage, nothing. You simply said, you know what? Here's the house that I want to buy. Here's what it looks like. You know, I have it in my head. Now I have a photo of it. I'm going to put it in this vision board. That's step one, you know, very small step. There's nothing that could go wrong with doing that, right? And then eventually you build on that, you know, and say, well, how much does this house cost? You know, so if I wanted to put 10% down, what would that look like? And how long do I need to save for in order to achieve that? You know, and then you start coming out with the plans. You break them up into smaller chunks so that it seems more achievable. And then you have consistent check-in periods with yourself or others. If you have an accountability partner, would be even better to then realize, okay, I'm on the right track. And if I'm not on the right track, I want to know the sooner the better, because then I can adjust course and change. You know, wouldn't you rather know that sooner than later than just not doing anything at all? You know, which way do you have a better chance? You know, and sometimes that means asking for help too. You know, sometimes we are afraid to ask somebody for something that we need from them in order for us to move forward with the goal. You know, and think about it this way. If you don't ask, well, the answer is 100% no, right? Because very likely that person that you would ask that to is not just going to come out and give you what it is that you need. So you significantly increase your chances just by asking, right? Sometimes you hear the word saying, hey, the worst that could happen is they say no, right? Yeah, perhaps, you know, but it's definitely no if you don't ask. So think about that too. You know, a lot of these goals that we're trying to achieve are not necessarily something that we're going to achieve on our own. Maybe we need some help. Maybe you need somebody to take care of the children for 45 minutes while you go on that walk. Whatever it is, you know, don't be afraid to ask. That could be one of the small little steps that you could put on your list. So another thing I wanted to share was that, you know, these things can translate into consequences that you may not necessarily realize, because sometimes not taking action is even worse than taking some form of action. You know, let me give you a small example. You know, when you have different goals and that require money, depending on their time frame and also whether or not you can afford to take some risk, you can have different, what I call buckets of money, right? So for example, if you're buying a house within the next year or two, and you have some money that you're putting away as a down payment, closing costs, that's something that you're going to have in that bucket for your house, right? It's perhaps something that you should not invest because you're going to need the money very soon. And you don't want to take the chance that you put it into something like stocks and then the stock market goes down when you need the money, right? So you're going to have that safer bucket there for like, okay, this is my down payment money. I'm just going to put it in a savings account, make a little interest, and then use it within a year or so when I'm ready to buy this home. Now, you could have a long-term bucket that is something like, hey, you know what? I'm 40 now and I'm not retiring until I'm 60. So I don't need my 401k money for another 20 years. I don't plan on using it because this is like my reserve bucket for way into the future when I'm retired, right? So under that scenario, you're likely to be able to take more risk, right? Now, think about how some people might be very fearful of the stock market because they've seen the news. They see the wild swing sometimes in a particular index like the S&P 500, and it scares them, right? And it's a legitimate concern. Obviously, you know, some people can sleep well if their money is going down like that. Now, I look at it this way, you know, it depends on, obviously, you know, many factors, your risk tolerance, your age, your income level, all kinds of things. But think about it this way. When you put money in the bank and you make a certain amount of rate of return on that money, right? That money is considered safe, right? Because it's in the bank, it's not invested, so you're not likely to lose your principal. There's FDIC insurance up to $250,000, let's say, right? So it feels safe, right? Now, because it's so safe, you're also not likely to get a high rate of return because you're really not taking any risk. When you invest, you're putting your money into something with the expectation that you're going to get a rate of return, but you're also taking a chance because you are risking at least a portion of that money, right? So when you look at the stock market, historically, has had a lot of swings up and down throughout the years. Sometimes very significant, like the Great Depression. You've had, 2008, which a lot of people remember, at the beginning of COVID as well. So it could be something that a lot of people are not comfortable with, and they get very afraid. Now, think about it this way. If you are young now and you're investing for your future and you don't need the money immediately, some people look at it like, you know what? I actually get excited when the stock market goes down. And the reason for that is because think of yourself as somebody who is in the accumulation phase of your life where you're putting money away for the future, right? Now, let's put the stock market aside. Let's say that you need to buy diapers every single month for your young kids, right? And the price of diapers is going to increase by 5 cents every single month. But every month you have to continue to buy them. Now, would you rather buy them when they're cheaper? Or would you rather buy them as the price keeps going up? It's something for you to think about, right? So if you have the money and you know it's going to go up, then you will buy them when they're cheaper, because then the diapers can continue to go up later and you've already locked in your price at the lower price, right? If you end up buying more than you needed, let's say, you can always sell it for a profit, et cetera. Now, the reason I mention that is because, a lot of my listeners have kids, and probably something that's very easy to relate to. Now, when you think about the stock market, you're also buying something, right? You're investing in different companies. So you're buying these companies. Now, a lot of my clients, depending on where they are in their lives, some people that are already at an elder age and they're withdrawing money from their funds to live on, they have more nervousness when the market goes down because we're talking about the lump sum money that they already invested and that they need to live on every month, right? So it's very understandable to have that fear, right? Now, on the other hand, it's also very understandable when you're younger and you put in money and you see your money go down. But if going back to my the beginning of the episode when I was talking about embracing that fear, we'll think about yourself putting money away every single month. You're saying, if the market is down, or even if you have a lump sum of money that you're sitting on in cash, if the market is down, wouldn't I be better off buying when the market is down and then selling when the market is up? I mean, that's what you would do with everything else, right? But when it comes to the market, a lot of us have the reverse thinking because of emotions. I see a lot of people who, when the market is down, they immediately want to get out. And now it's like, okay, I lost money. I want to immediately sell it all and go to cash. And the reason behind that is because I don't want to lose any more money, and that's understandable. Now, if you have enough time, and obviously historical results don't necessarily mean that it will continue to perform that way. But when you look at it over time, I mean, the market is down and you sell when it's low. And then you sit in cash, now you have an actual loss that you realize. The market goes up again. And then you feel comfortable jumping back in. And now you're buying high, and you did the complete opposite. Or what you really should do is that when the market is down, if it's long-term money, it's something that you could afford to do. Obviously, speak to your financial advisor about this. You're very likely to be better off buying when the market is low, right? And then the market goes up and later you profit from that amount of rate of return that you get as the market returns. So And this is where fear comes in. It's just the fear of that unknown, just that quote that FDR said. There were a lot of words that stood out to me. He said, nameless, unreasoning, unjustified terror, which paralyzes needed efforts. And I was just like, wow, that is just so real, and I've lived through this myself, even just launching my own business, that I didn't know what was going to happen, just living with the unknown is not something that's an easy task. But I say, in my case, what's the worst that could happen? And that's something that I use all the time, because then if you can survive the worst case scenario, then you really have nothing to worry about, So to give you an example, I've gotten job offers to be just working for somebody else, right? And it's been more than one. There were several different companies. And I thought about, no, like I want to actually run my own firm, and I'm going to go for my own business, and it wasn't easy. I've had to do all kinds of side hustles, at the beginning when I first launched, just to pay the bills, right? And then eventually, and thankfully, the business picks up and you grow. But what happens is, I said to myself, well, what's the worst that could happen? If I launch this business and I fail, what is the absolute worst that could happen? And then I said to myself, well, you could always just go work for one of these companies, right? That job is there, whether it's at this company or company B or company C, because of my the experience that I have, the accreditations that I have, et cetera. Like I can just go get a job, right? So I'm like, wow, so I could either get a job now, or I can launch my own firm, be very successful, and run my own practice like I've always wanted to. Or if I fail, then I can just go get a job. So when you look at it that way, it made a lot of sense for me to just go and launch my own firm. And I'm very happy I did. And so I want you to kind of think about things that way and think of yourself, when you act courageous, it's not having fear. That's another thing I've learned. Fear is going to be there. So fear is not the lack. Courage is not the lack of fear. And this is another quote that I wanted to attribute to FDR. He said, courage is not the absence of fear, but rather it's the assessment that something else is more important than fear. So when you're courageous, when you're brave, you're acting in the presence of fear, in the presence of the unnamed, unknown fear, that thing that sometimes brings you to a paralysis because you're just so afraid of the unknown. So I want to challenge you to consider what could be the hidden opportunity the next time you experience quote unquote failure. Think about what you've learned from that. What can you use from that to continue to move forward or pivot? And also, if there's one thing that you've always wanted to do and you just never dared to because of fear, what is the smallest step that you can take today to get there? And I want you to start working towards that. And like I said, it could be as small as just printing a photo or something and pasting it in front of your fridge or in your monitor so that you see it every day. Something that small could have a very long-term impact, because then you build on that. And you just go to step 2, step 3, step 4. You fail, take 2 steps back. Fine, I learned how not to do that anymore. Now I can do it this way. Now I know when this thing comes up again, I know how to handle that because I already did it and failed at it, right? But you use the failure to your advantage to move towards success. So thank you all for tuning in. I hope that you got something from this. If you have any questions, I would love to hear from you. What are some things that you did not dare do in the past, and now you just kind of say, hey, you know what? I'm going to take that first step. Send me an email at luis@onmywaytowealth.com. Thank you for tuning in, and I'll see you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.